What's up guys, welcome back to the channel. In today's video I'm going to show you how to set up an account with Treasury Directgov so you can start investing in government bills, bonds, and notes. But real quick, what do I mean by bills, notes, and bonds? They're the same thing if you're investing in government securities. They're just different names for the same thing. A bill is a Treasury security of less than 1 year. A note is 1 to 10 years, and a bond is more than 10 years. And if you're not familiar with what a bond is, it's basically an IOU. If you're a bond investor, you're loaning money, usually to a government. It can be state, local, or the federal. But there also are corporate bonds, in which you're lending money to well-known companies like Ford or GM. And when you issue the bond, they're basically agreeing to pay you back the principal that you gave them in addition to interest. This can also sometimes be called the coupon rate. Back in the day when bonds were issued like over 100 years ago, you were actually given like a physical piece of paper and then you would take that coupon in order to be paid your interest. Everything these days is digital, so you don't have to worry about that. But basically, you're going to be repaid the principal at the time of maturity of the bond, and then you'll be paid interest if it's less than a year. If it's greater than a year, you'll be paid interest every year. So if it's like a 10-year bond and it's a 5% rate, let's say you were to invest $1,000, you would be paid interest $50 every year, once a year. Now, why would someone want to invest in bonds over stocks? That's a good question. The pros of government bonds is they're guaranteed. They're backed by the full faith and credit of the United States government. So as long as the United States government doesn't collapse, you will be paid. Buying bonds is a better option than just letting your money sit in a checking or savings account. Most checking or savings accounts that Americans have only earn maybe 0.01%. So buying government bonds is pretty nice because they're relatively liquid. The lowest time interval that you can buy government bonds is 28 days. That's not a lot of time, so your money still is relatively liquid if you need it in the near future. In addition, there also is secondhand bond markets. So if you hold a bond and want to get rid of it, it is relatively easy to sell it secondhand. Federal bonds are also very nice because they are income exempt for state and local taxes. If you buy, once again, government bonds through the federal government, states and local governments can't tax your earnings on that. This isn't true for money market accounts or CDs. Another reason to buy bonds is if you think the economy is on a downswing. When companies go bankrupt or lose a lot of their value, shareholders take the losses first. So in priority of who gets paid out, if you have debt or bonds, you're going to be paid first before any kind of dividend investor or stock shareholder. What are the cons? It's low yield. So if you're a long-term investor, if you're young and you're planning on investing for 20, 30, 40 years, you want to be in stocks because you'll earn more long-term. However, if you're a short-term investor, let's say you're already retired, you're in your 60s, you might want that lower yield with a higher guarantee because you're not going to be investing long-term. If the market loses 40% of its value like it did in 2008, you don't have 3 years to hold those stocks to wait for the market to recover. You need to be withdrawing now in order to live on that income. Another con of government bonds these days is they're barely beating inflation. We'll go over the specific rates later in the video, and I'll show you what I mean by that. What you earn on a bond is roughly correlated with interest rates set by the Federal Reserve. So government bonds back in the 90s were earning 5%, and in the 80s they were earning as high as 15%. So today they're barely earning 2%. TreasuryDirect.gov is the website you need to go to in order to directly buy government bonds. I highly recommend that you search it through Google or click on my link in the description. Don't try and type it in. If you type it in incorrectly, you might accidentally navigate to like a spoof fake website, people trying to steal your information. So go through Google or click my link in the description. First, before you invest, you have to open an account, so select Open Account. You're an individual or opening a personal account, so you're going to want to go through Treasury Direct, not the other two. It's a 3-step process. I'll walk you through it. Scroll down to the bottom, hit Apply Now. You might want to be opening up an account for either your business, your corporation, or LLC. That's entirely possible. But for today's example, we're going to do what I did and just open an individual account. You're going to enter in all your information, your name, give your account name. I just said Jake's account. You're going to use your tax identification number, which is your social security number. Scroll down to the bottom and hit submit. On the next page, you're going to choose a personalized image or caption. If you were to somehow end up at a fake website, they couldn't know what image that you selected. You're also going to enter a personal caption for your photo. On the next page, you're going to enter your password and then a password reminder and then your 3 security questions. At this point, they're going to email you your account number. So you have to go to the email that you provided and get your account number. It should be a letter followed by 9 numbers. Once you have your account number, you can go on the Treasury Direct link, select that, then select Login. You're then going to be issued a one-time password to register your computer. Obviously, this will be the first time you're using your computer with your account. They want to link those two together. Once again, check your email and they're going to send you a one-time password. You're just going to copy and paste that in. Once your computer's been registered, you're then going to enter in your account password. And they have this old school punched keyboard, which is kind of funny. And it turns out your password was not case sensitive. I made my password case sensitive, but there's no way to do lowercase on this keyboard. And it says right here, password is not case sensitive. All right, once you're logged in, it'll show you my account. I currently don't own anything, and I'll explain why in a sec. Select Buy Direct. And this is pretty easy. You can buy bills, notes, bonds, or any of these other things. The easiest one is bills, so we're going to give that a try. Select bills and then hit submit. You're now going to see the display of when the auction date is and the issue date is for all of the bills. And it goes from as low as 4 weeks, 28 days, all the way to 52 weeks. Today's current date is October 12th. So what happens is there's an auction once a week in which all the bills are issued. The auction date for next week is the 17th. And then the issue date is the 22nd. What does that mean? It means that you agree to purchase the 4-week Treasury bill on the 17th, and when you entered your bank account information, it'll then be withdrawn from your bank account on the 22nd. We're going to select the 17th. You're then going to enter a purchase amount. The minimum purchase amount is $100. You can also schedule reinvestments. So if you want it to just every 28 days, kick back in, reinvest itself, you can do that. Then you hit submit and that's it. You just bought your first $100 Treasury bill. The question you're asking yourself now is, how much is it going to be worth? Well, there's no way to know officially until the auction date, but you can go on the website and look at the most recent auctions. So on the website, click Individuals, Treasury Security and Programs, then hit Treasury Bills, then click See Rates in Recent Auctions. And there you go. These are the rates for the most recent auctions. So there was an auction yesterday, and the issue date will be on Monday, the 15th. And the interest rate set for that will be 1.751. You can select Upcoming for your auction date. And here's the one that I just purchased on, the 4-week on 10/15. If you select Auction Results, you can see once again what the price per $100 is. What this means is that when the bill matures, you're going to get $100 back. But what is going to be withdrawn from your account? What would have been withdrawn from my account had I been in the last auction would have been $99.86. And then 4 weeks later, they would have paid me $100. So if I was in the last auction after 4 weeks, I would have made 14 cents. Now, 14 cents isn't a lot, but you just have to scale it up. What if you were investing $1,000, $10,000, $100,000? This is guaranteed money that you will see in 4 weeks because it's backed by the United States government. There are a lot of independent websites that have trackers for what the interest rate is on Treasury bills, notes, and bonds. What you're looking at on this website is the 10-year Treasury rate. And you can kind of see that it peaked towards the end of 2018, and it was at 3.24%, which is not bad. But because the Federal Reserve has kept cutting interest rates this year, because they're worried about the economy slowing down, the interest rate has just plummeted, and it got as low as 1.47, and it's at 1.76 right now. Now, investing in government bonds or bills doesn't make sense for me right now because there are all these private banks that are offering high-interest savings accounts. Ally Bank will give you 1.8%. PNC Bank will give you 2%, and Wealthfront is offering 2.07%. And these are all savings accounts. They're money market accounts, but savings accounts where you just deposit your money and then it accumulates interest once a month. And yeah, if you have money at all and you value liquidity, there's no reason why you should be buying Treasury bills at 1.76 when you can just open a savings account with Wealthfront and get 2.07. Why are these private banks offering higher interest rates than government bills? It's because they're basically operating at a loss. They want to get you into their network of services so you'll then get insurance, credit cards, home mortgages. You'll then have a brokerage account and then pay fees on investing. But if you're watching this video in the future, I filmed this in October of 2019. If you're watching this video in the future, it's very possible that the Treasury yield rates have gone back up to 3 or higher than what you would get at these private banks in their high interest savings accounts. Okay guys, thanks for watching. If you like this video, give it a thumbs up so the YouTube algorithm knows to recommend it to other people. In addition, if I didn't explain something well or you have any questions, leave me a comment down below. I will get back to you. And if you haven't already subscribed to my channel, consider subscribing. I post weekly about military and finance topics. And until the next video, take care.